did you? Anything you want.
Gold and silver suppression game running out of ammunition. David Morgan. Precious metals expert David Morgan thinks the price suppression game in physical gold and silver is showing signs of fatigue, especially in the gold price. Just last week, $1 billion of gold, paper contracts, was reportedly dumped on the market in about a minute. The price went down less than $10 per ounce and, shortly afterwards, bounced back up. Morgan explains, "They are running out of ammunition as far as I can tell, which means when they do these massive sell-offs, they are being less and less effective. They have to use more and more power to get less and less result. This is why I am saying they are running out of ammunition. They have to do a fair amount of work to get the price down, and then it bounces right back. It shows you the resilience in the gold market. They can't push it down, but they are not going to let it rise either because of this pricing mechanism to say dollar good, gold bad." Morgan says the silver price in the $14 per ounce range and gold around $1,200 per ounce is about mining cost for both metals. Morgan says, "This tells me you can't get it much lower for very long." Central banks are buying gold not because it is in the monetary system, but because of fear of what is going to happen to the US dollar. That is a fundamental fact. Where are we technically? I'd say we are near a bottom right now, in both metals. Gold is now making a higher low, and silver is also making a higher low. I think by the end of the year that we will be certain that this is the low. There is another very big reason to own physical gold and silver, and that is the possibility the deep state and the globalists will crash the financial markets. This is not a far-fetched concept as President Trump has declared a national emergency to protect the financial system in a December 2017 executive order. Morgan thinks, if you look at the potential reaction by the deep state, these people do not lose gracefully. These people will stop at absolutely nothing. So, you have to factor that into your thinking, which means they could certainly take down the financial system because they are losing the game. In other words, turn over the card table. That's what the metal is for. You've got to outthink these people. You've got to be 2 or 3 moves ahead. So, if they are going to turn over the table, you have to be prepared before they turn over the table and what to do after they turn over the table. So, we are in a state of emergency. Listen, we need a reset. We need a new monetary system, and we need money working different than it's working now. If we have a reset and the bankers stay on top again, regardless of how they do it, we've really gained nothing. Gold awaits the decision on tariffs and China's response. David Brady. The worst-case scenario is that the tariffs are implemented all at once and immediately, which would prompt the. By David Brady via Sprott Money News. 25% tariffs on $200 billion or 40% of China's exports to the U.S. are due to go into effect today or shortly thereafter. There seems little doubt that the U.S. will proceed with these tariffs. The U.S. trade deficit with China hit a new record high in July. All that remains to be determined is how they will implement them and how will China respond? The tariffs could be implemented in several ways. The worst-case scenario is that the tariffs are implemented all at once and immediately, which would prompt the most negative response from China. If they choose to continue to devalue the CNY on a daily basis, then gold will continue to fall to lower lows. They could also devalue the yuan overnight by 10 to 15% on top of the depreciation in the yuan to date. I have covered this in detail in prior articles, but suffice to say that this would mean USD/CNY would rise 10 to 15% overnight, but gold would remain unchanged in dollar terms, at least initially. Such a devaluation would likely cause a U.S. stock market crash and Fed policy reversal to stimulus on steroids, causing the dollar to peak and drop USD/CNY2 and gold to rise from that point forward. Alternatively, the US could decide to implement the tariffs all at once, but weeks from now or after the midterm elections. Initially, I would expect a relief bounce in the yuan, drop in USD/CNY, and gold to rise. However, as the date for implementation approaches with no resolution, USD/CNY would likely rise again and gold fall. Lastly, the tariffs could be implemented in stages. For example, they could roll out tariffs on $50 billion of Chinese exports per month over 4 months. This would delay the impact to U.S. consumers and businesses and therefore would reduce their potentially negative impact on the midterm elections. However, it would likely not impact China's response. USD/CNY could resume its daily appreciation under such circumstances, and gold would continue to fall. The trade war and its effect on the USD/CNY exchange rate remains the primary determinant of gold prices in dollar terms. Until either the trade war ends or the dollar falls, either of its own accord or due to a Fed's reversal in policy, USD/CNY is likely to go higher and gold lower. Until then, the uber-bullish positioning, sentiment, and technical data will simply remain as fuel for the coming rally, in my opinion. Switching gears to other recent developments related to the long-term outlook for gold. Reuters: China's Zijin Mining will buy gold and copper miner Nevsun Resources for $1.41 billion. Big companies investing in mining companies at relatively low prices is a clear sign that the bottom is close in gold, in my opinion. Sales of gold coins and bars surged 30% from July to their highest since October 2017 and nearly doubled from August 2017. Clearly, the smart money is accumulating physical gold and silver at what they perceive to be bargain basement prices. Widespread weakness in emerging market currencies encourages the rest of the world to buy gold at the same time that the smart money in the US and elsewhere is picking up gold on the cheap. It may not be much, but it is also India's first official gold purchase since 2009, notably following the global financial crisis, which may provide insight as to rationale for their more recent purchases. According to analysts in Mumbai, the Reserve Bank of India also added 6.8 tons to its reserves in July. That takes its total gold reserves to 573 tons in July, the 5th consecutive month of purchases by the RBI. Simply put, this means that yet another central bank is purchasing gold. Clearly, demand from the smart money for physical gold and silver and mining operations is increasing as prices fall. Emerging markets are also buying, as global risk aversion increases. Just as M&A in the metals mining sector is picking up when mining stocks are plumbing new lows, institutional investors are buying yuan-denominated bonds when the yuan is near its lows relative to the dollar. What does this tell about the smart money's view on the yuan versus the dollar long term? A lower dollar and a higher yuan mean higher gold prices. This speaks to the acceleration of global de-dollarization, as the U.S. attempts to impose its will on the gold axis of China, Russia, Iran, and Turkey to protect the dollar's status as the global reserve currency, GRC. Gold is the anti-dollar. If or rather when, in my opinion, the dollar loses its position as the GRC, gold will explode higher and silver will too. I believe this will occur following the Fed's response to the next crisis, when I expect them to print the dollar into oblivion to cover all of the U.S. debt and unfunded liabilities, and they will likely resort to helicopter money to keep the consumption-led economy from imploding. Although this comes from Goldman, it's hard to argue with its track record. According to Fed Chair Powell and the FOMC recently, a stock market crash means a policy reversal will follow shortly thereafter. I have said repeatedly that a reversal of policy by the Fed to stimulus on steroids will likely mean the peak and fall of the dollar and a truly historic low in the dollar price of gold. I'm sharing my holistic mosaic approach with you to emphasize that although precious metals have fallen significantly recently and remain under pressure, the outlook beyond the short term is increasingly bullish. With this in mind, I'll leave you with this final chart, courtesy of Charlie Bolello. This is the best graph on gold out there, in my opinion. It clearly shows just how undervalued gold truly is, how overvalued stocks are, and why cycles matter. What happened to gold and silver prices post-2002? Follow the smart money long term.